So that is the first point that you need to know, that installment tax is not an additional tax, but a way in which the company pay the current year tax, corporation tax during the current year in installments. What does that mean? This is what it means. You see, for a company which can start the year, for example, on 1st of January 2021, it means the year will end on that 1st of December 2021. A company has to operate the whole of the year, get to the end of the year, determine the taxable income of that particular year. If you find that the taxable income is like 100 million, the company will be required to determine the corporation tax. And we have seen, for example, if it is a resident company, then the corporation tax will be 30% of the taxable income. That means that the company is supposed to pay 30 million. That is the corporation tax, which is now the actual tax. But according to the Income Tax Act, that company is supposed to have paid that tax during this year as it was operating. So how was it supposed to be paid? It was supposed to be paid in installment. But now the question is, how can you tell a company to be paying that year tax during that year in installment, whereas it has to get to the end of the year, determine the taxable income and the tax is supposed to pay? So this is supposed to be done at the start of the year, where the company do an estimation of the tax that they are supposed to pay in that particular year. Then they pay it in installments. So I want us to see how that estimation is usually done, and then once it is done, how it is paid. So this is how we estimate that tax, which you have said is done at the beginning of the year. For an ongoing company, that means that the company started operation a long time ago, we take 110% of the previous year tax. For example, what I had indicated here, it was the year 2021. The previous year was 2020. The company was still in operation. So we take the tax that was paid in 2020, and then we take 110% of it. So if in 2020, the company paid 10 million, so we take 110% of 10 million. That gives you 11 million. So that becomes now the estimation of the tax for that year that need to be paid in installment. For a starting company, for example, for that company that started on 1st of January 2021, it doesn't have the previous year where it can take 110%. So it normally do what we call budgeted tax. So it has to determine how much is the tax it's supposed to pay in that particular year. And how do they determine the budget tax? They use the budgeted taxable income. You see, once the company prepare the budgeted income statement, we can adjust it to get the budgeted taxable income. And from the budgeted taxable income, we multiply by the corporation tax rate to give us the budget tax is supposed to pay. So once that is done, then it is paid in that particular year. Point number 3, payment. So the payment of the installment tax, once it is estimated at the beginning of the period, usually depend on whether we are talking about an agricultural company or agricultural company. A non-agricultural company, these are companies that do not do farming. So we are talking about any other company other than those that are in farming. For example, a bank, an insurance company, a transport company, and any other that is not in farming. So we are going to see how it normally make the payment of the installment tax. The other one is an agricultural company. These are companies that do farming. So how do they pay their installment tax? I want to illustrate for each one of them. So we are looking at the payment of the installment tax, and we say the payment is dependent on whether it's an agricultural company or an agricultural company. And we say an agricultural are all other companies other than those that do farming. So once we have estimated the installment tax using either here or this one, this is how it is paid. We have the installment, the amount payable, and when it is due. And we have the first installment, where we take 25% of the total installment. For example, as I had mentioned, we estimated that the installment is supposed to be 11 million, based on 110% of previous tax of 10 million. So 1/10 of 10 million, that is 11 million. So you take 25% of 11 million, and then you pay by 20th of the 4th month in the year of income. So in that year, so if it is the year 2021, you pay by 20th of April 2021. And then we have the second installment, another 25% of the total installment, what you have estimated, the 11 million, and you pay by 20th of the 6th month in the year of income. So if the year of income starts in January, that means that by 20th June 2021, you pay the second installment. Then we have the third installment, another 25% of the total installment. So 25% of 11 million, and you pay by 20th of the 9th month. So if your year of income starts January, we are talking about September 20th. In that year of income, you pay the third installment. Then the fourth installment, another 25% of the total installment of the 11 million we talked about, and you pay by 20th of the 12th month in the year of income. Now, you note that by the time you pay the fourth installment, you'd have paid 100% of the total installment, because you had paid first installment 25, second 25, third 25, fourth 25. You add these percentages, you get 100%. So by the time you pay the fourth installment, you have paid 100% of the whole installment, 11 million. Now, by that time, you can see here, we are talking about 20th of the 12th month. You are around, if the year of income starts January, that means that it ends on 31st December. So it means that you are around 11 days to the end of the year. So now you'll get to the end of the year, where now you determine the actual taxable income. Like I had mentioned, the actual taxable income of the illustration I had given was 100 million. So you multiply by 30%, you get the tax that you're supposed to pay is 30 million. So now you determine that I was not actually supposed to pay 11 million as I paid through installment. I'm actually supposed to pay 30 million, where now you'll be required by the government to make the final payment. We call it final tax, and this is based on actual tax. So how do you get the final tax? Final tax is as a result of taking the actual tax, like we have said, the actual tax is 30 million, minus the total installment you have paid, the 11 million. So the difference is 19 million. So that is now how much you owe to the government by the end of the year. When are you supposed to pay it? By 30th of the 4th month after the year of income. So if the year of income ended on 31st December, so that means that 30th April 2022, you are supposed to make this final payment. And sometimes here you are saying that, we are talking about the final tax that you're supposed to pay. It can also be a refund, whereby if the actual tax is less than the installment you have paid, like we said, installment tax that we had estimated was 11 million. How about in case you get the actual tax is 8 million? So it means that you have paid more through installment, the 11 million, than you are actually supposed to pay, the 8 million. There is a difference of 3 million. That 3 million become the refund, not to be paid. That is for non-agricultural companies. How about the agricultural companies? This is how the installment tax is paid. So that is for agricultural companies. That is how they pay the installment tax. And if you compare with the non-agricultural company, you find that there is no much difference. Actually, the only difference is that for agricultural company, instead of paying the first installment of 25 and the second one and the third, they are combined and paid where we were paying the third installment for an agricultural company. So we add the 3 so that the first installment becomes 25% of total installment you had estimated, and you pay by 20th of the 9th month in the year of income. Now, once you pay the 75%, that means that there is 25% remaining. So that 25% becomes the second installment, and you pay by 20th of the 12th month in the year of income. Now, after that, just like we said here, you'll be required when you get to the end of the year, determine the actual tax that you're supposed to pay, and now you pay the final tax. Final tax is supposed to be the actual tax for the year minus the installment that you have paid. So the difference you pay by 30th of the 4th month after the year of income. So that is how we normally pay the installment tax. So for these two, the corporation tax and installment tax is done.